Dear students, welcome to my channel. In continuation with the discussion that we had with respect to final accounts, today let us discuss profit and loss account. Profit and loss account is one of the financial statement, an account which is prepared to know the profitability of the business organization. Previously, we have discussed the preparation of trading account. In that, the final result would be either gross profit or gross loss, which is transferred to the profit and loss account. That would be the starting point for the preparation of a profit and loss account. Every business, they intended to make profit and they work for making profit. So if the trading account shows a gross loss, then that will be transferred to the debit side of the profit and loss account. And if it is gross profit, it will be transferred to the credit side of the profit and loss account, and that will be the starting point. So in continuation with that, we will be writing mainly selling expenses and distribution expenses, management expenses, depreciation and maintenance expenses, financial expenses, and any other extraordinary losses takes place that also will taken into consideration for the preparation of the profit and loss account. Similarly, in the credit side of the profit and loss account, we will be writing interest received, discount received, commission received, rent received, income from investment, apprentice premium received, or any other source of income received, or any other miscellaneous receipts received by the business organization. So here, the businessman wants to know the profitability of the business. So all the receipts and all the incomes, indirect incomes, will be written in the credit side of the profit and loss account. Similarly, all indirect expenses such as advertisement, traveling expenses, commission paid on sales, bad debts, go down rent, carriage outwards, bank charges, rent rates, taxes, office heating, lighting, etc., printing and stationery, Xerox charges, pen, pencil, etc. bought, postage and telegrams, legal charges as well as audit fee, insurance, general expenses, office expenses, depreciation, maintenance expenses, repairs, discount allowed, interest on capital or interest on loan, and any other extraordinary loss that taken place because of the theft, fire, etc., which could not be covered through the insurance, will be coming under or written in the debit side of the profit and loss account. If the credit side is more while totaling, if the credit side is more and the debit side is less, which means excess of income over expenditure is said to be net profit carried down, which will be transferred to the capital account. Similarly, if the debit side is more and the credit side is less, then it is said to be net loss. If it is net loss, that also would be transferred to the capital account. But we have to give some special attention with respect to certain items. For example, salaries. Salary is an indirect expenses. And wages. Wages is a direct expenses. So wages will appear in the debit side of the trading account, and the salaries would appear in the debit side of the profit and loss account. Suppose the item is named like wages and salaries, then it should be placed in the trading account, and the priority is for wages account, so that it to be placed in the trading account. If it is given as salaries and wages, then it to be placed in the profit and loss account. If wages and salary is given, it to be placed in the trading account. If salaries and wages, the item is saying like that, then it to be placed in the profit and loss account. Suppose in the trial balance, an item trade expenses is given. Only trade expenses is given. That trade expenses to be taken in the profit and loss account. Suppose office expenses is alone given, then it to be taken in the profit and loss account. If trade expenses as well as office expenses is given, then the trade expenses has to be taken in the debit side of the trading account and the office expenses to be taken in the profit and loss account. Hope this preparation of profit and loss account is clear. It is nothing but where we will be starting with the gross profit or gross loss carried from the trading account, and will be writing all indirect expenses and all indirect income. If the credit side is more, then it is said to be net profit. If the debit side is more, then it is said to be net loss. Hope this video is useful. If it is, please share it across the students. Thank you very much.